Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets of the corporate world. And today we're diving into an annual report that is a little old-fashioned, shall we say. Get ready for a deep dive into Reading International Incorporated's proxy statement. This document, a proxy statement, is basically the company's way of telling its shareholders what is up for discussion and voting at their annual meeting. Think of it as the agenda and the detailed notes for a very important company meeting. We're going to break down their 2025 annual meeting notice, which actually details events for the year 2025. Giving us a great look at their strategy and management's perspective heading into the current year. And if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these in real time. So Reading International is holding its 2025 annual meeting of stockholders. What is interesting right off the bat is that they've moved to a virtual format. They explain this is due to cost savings and convenience, a trend we've seen become standard after the pandemic. Mark your calendars for the 4th of December 2025 for this virtual gathering. They've got a few key items on the agenda. First, they want to elect 5 directors. Second, they're asking shareholders to ratify the appointment of their independent auditors, Grant Thornton LLP. Third, and this is always a juicy one, they're asking for an advisory vote on executive compensation, essentially. A say-on-pay vote. And finally, as is standard, they'll cover any other business that properly comes before the meeting. When it comes to director elections, they're proposing 5 individuals. We'll get a closer look at who they are soon, but the main takeaway here is that the company is seeking to maintain its current board leadership. Looking at the nominees, we see some familiar names and long-standing board members. Margaret Cotter is the chair of the board and also an executive vice president. Ellen M. Cotter is the vice chair, chief executive officer, and president. It is notable that both of these key leadership roles are held by members of the Cotter family, who, as we'll see later, have significant control over the company. The report mentions that Margaret Cotter has sole voting control over a large portion of the Class B stock and shared control with her sister, Ellen, over even more. This heavily controlled structure is a significant factor in how the company operates and decisions are made. Now, let's peek at how the directors are compensated. For 2024, the cash compensation for outside directors ranged from about $82,500 to potentially more, depending on their committee roles. On top of that, they also receive stock awards valued at $70,000 each, in the form of stock options. For instance, Guy W. Adams, Dr. Judy Cotting, and Douglas J. McCann all received this compensation package. The options typically vest over a period of time, for example, 1 year, aligning their interests with the company's long-term performance. Moving on to Proposal 2, the ratification of Grant Thornton LLP as their independent auditors for the fiscal year ending the 31st of December 2025. This is fairly standard procedure. Their auditor has been with them for quite some time, from 2011 through 2024. Stockholder ratification isn't legally required, but it is considered good practice. If shareholders vote against it, the audit committee will reconsider their choice. The say-on-pay vote, Proposal 3. This is where shareholders get to voice their opinion on how much the top executives are paid. The report states that in 2024, they received an advisory vote in favor of their executive compensation, and they did not make changes based on that vote. This vote is advisory, meaning it is not binding, but it is a strong signal to the board about shareholder sentiment. We'll delve into the compensation details a bit later, but it is important to see how their pay aligns with company performance, which is what this vote is all about. The Audit Committee's report confirms they've reviewed the company's financial statements with management and Grant Thornton. They're responsible for overseeing the financial reporting and audit functions, making sure everything is above board. They state that based on their review and discussions, they recommended that the audited financial statements be included in their annual report. It is good to see the Audit Committee is actively involved in this crucial oversight. Now, let's get to the juicy part: who actually owns the company. This table reveals who holds the most shares. The Cotter family, particularly Margaret and Ellen Cotter, hold a massive chunk of both Class and non-voting stock and Class B voting stock, as of the 14th of October 2025. Margaret Cotter alone held 1158988 shares of Class B stock, which is a whopping 69.0% of the voting stock. Ellen M. Cotter holds 457,166 shares, making up 27.2% together. They control over 90% of the voting power. This explains why the company is considered a controlled company under NASDAQ listing rules, and why certain governance requirements are waived. We also see significant holdings from entities like the James J. Cotter Living Trust and the estate of James J. Cotter, Sr., also controlled by the family. Other notable shareholders include Mark Cuban and Gamco investors, who hold smaller but still significant percentages. Let's dive into the executive compensation details. The compensation committee, made up of independent directors, even though the company is exempt from some independent director requirements due to being a controlled company, oversees executive pay. Their philosophy is to attract and retain talent, be competitive, and align compensation with business objectives and stockholder value. This section is key for understanding how executive pay relates to actual company performance. They present data for the last 3 fiscal years, comparing compensation paid to the principal executive officer, or PAYO, and other named executive officers, or NEOs, against metrics like total shareholder return and net income. Looking at the data for 2024, the PAYO Ellen Cotter had a summary compensation table total of over $1 million. However, the compensation actually paid was significantly less, at around $536,000. This difference arises from adjustments like deductions for option awards. For the non-PAYO NEOs, the average compensation actually paid was about $444,000. The table compensation actually paid to PAYO is interesting. For 2024, Ellen Cotter's total compensation from the summary table was $1,004,760. But after deductions for option awards, changes in fair value of equity awards, and other adjustments, the compensation actually paid came down to $536,130. This is a significant difference and highlights how reported compensation values, especially those related to stock awards, can fluctuate and may not reflect the actual cash received in a given year. The deductions for option awards alone were substantial, nearly $385,000 in 2024. This shows a strategy of compensating executives with equity that may or may not be fully realized depending on stock performance and vesting schedules. Now, let's look at the summary compensation table itself. For 2024, PAYO Ellen M. Cotter's salary was $618,000. She also received stock awards valued at $384,180 in the form of option awards, making her total compensation $1,004,760. Notably, there were no non-equity incentive plan compensation or termination benefit amounts listed for her in 2024. For Margaret Cotter, her salary was $479,250, with option awards of $102,991, totaling $597,071. S. Craig Tompkins. The General Counsel had a salary of $450,883 and option awards of $101,392 for a total of $573,845. The inclusion of significant option awards in their compensation packages is a clear strategy to tie executive pay to the company's stock performance. Looking at outstanding equity awards, we can see the unvested stock options and restricted stock units held by executives as of the end of 2024. For Ellen M. Cotter, there are a significant number of unexercised options and various units of restricted stock that have not yet vested. For example, she has 484,499 shares underlying unexercised options. Some of these restricted stock units, like 7764 units, were set to vest in April 2025, with a market value of over $10,000 at that time. This shows a clear incentive for executives to stay with the company to realize the full value of their equity awards. The section on certain relationships and related party transactions is always an interesting read. Here we find details about dealings the company has with its directors, officers, or significant shareholders. The report details a complex relationship with Sutton Hill Capital, LLC or LC, or SHC. It seems Reading has been involved in transactions with SHC dating back to 2001 related to cinema properties. Currently, Reading International's main interaction with SHC involves the Village East Cinema, where they operate as a subtenant paying a fixed rent. Importantly, rent payments for the Village East have been deferred since October 2023 due to industry challenges, with over $1.18 million in deferred rent as of the 30th of September 2025. Recently, in September 2025, Reading entered into an agreement to purchase all general partnership interests in Sutton Hill Associates, the parent company of SHC, for just $1. This massive consolidation comes with taking on significant debt previously held by SHC. This move to acquire SHC's interests suggests a strategy to simplify their holdings and potentially gain more control over these valuable assets. Finally, let's touch on the auditors and fees. Grant Thornton LLP audited their financial statements for the year ending the 31st of December 2024. The audit fees for 2024 were about $1.44 million. Interestingly, for both 2023 and 2024, Grant Thornton LLP provided no audit. related or tax services, and no all other fees. This suggests a clear separation of audit work from other consulting services. Now, let's put on our investor hat and look at what this all means. Reading International is clearly a company with a solid base of control, largely in the hands of the Cotter family. Their strategy revolves around consolidating assets, particularly in the cinema and real estate sectors, and managing costs effectively, as evidenced by their move to virtual meetings and their compensation strategies. The heavy reliance on equity compensation, like stock options, aims to align executive interests with shareholder value, but it also means a significant portion of their pay is performance dependent, which can be a double-edged sword. The deferred rent at the Village East Cinema highlights the ongoing challenges in the live entertainment and real estate sectors. But their move to acquire HC suggests they see long-term value in these assets and are willing to take on debt to consolidate control. The controlled company status means that significant decisions will likely continue to be driven by the majority shareholders, which can lead to quicker strategic moves but might also limit the influence of minority shareholders. In conclusion, Reading International appears to be navigating a complex industry landscape with a clear vision for asset consolidation and cost management. Their executive compensation structure prioritizes long-term shareholder value through equity, though the actual cash impact is moderated. The sheer control held by the Cotter family is the defining characteristic of this company, shaping its direction and governance. Alright, that is our breakdown of Reading International's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord linked in the description for more real-time discussions. Thanks for watching, see you next time.